What's going to be the big FX headline of 2021? Clearly, one look at the charts of the major players in the FX space, and much has been seen around the decline in the value of the dollar. Pre-COVID hitting near 17-year highs, then the drop for the dollar index. It's clearly benefited other currencies, but there have also been other headlines benefiting sterling, the Aussie, and also the Chinese currency. As a background to this, the biggest monetary experiment in economic history has been rolled out over the last decade, starting with the financial crisis as a method to support the banking sector. It's now being used to bail us all out. Goldman Sachs says the combined balance sheet of the G10 central banks has now topped 50% of G10 GDP. We keep hearing that at some point this will have to be dealt with, and the full effects of this unprecedented monetary support will make itself felt. How will that play out in the FX markets in 2021? Welcome to this edition of IG's Trading the Markets podcast. I'm Jeremy Naylor. Joining us today is Martin Essex, a technical analyst who's been covering the markets for some 40 years. He's also written a book about the bond markets. Martin, welcome. Key issues affecting the FX markets this year. What do you put as the big headline we're likely to see develop?
Well, for me, I think that the trend downwards in the dollar is likely to continue. And I think that's going to be the big theme throughout the year. I know the dollar's already fallen substantially, but I think it will fall even more. Two reasons, really. First of all, the markets are really quite confident that everything is going to be okay, which seems a bit strange at the moment. But they do think that the vaccines will help counter the coronavirus pandemic. And along with more stimulus from Joe Biden and from the Fed, there'll be a pretty strong economic recovery. Perhaps not immediately, in fact, well, certainly not immediately, but maybe from the second quarter onwards. And that means no real need for safe havens like the US dollar. And that means more money going into other currencies like the euro and the Australian dollar and sterling.
I mentioned the massively expanded central bank's balance sheets. Is this the year of reckoning, or will it have to wait until another year? And of course, the follow-on question to that is, when we do have to face this, which currencies are going to have to take the big impact?
I don't see any impact near term. In fact, I think quite the opposite. I think that there will be more stimulus, not just from the Federal Reserve, but from other central banks as well. The European Central Bank, for example, as far as the yen is concerned, I think we'll see ultra loose monetary policy from the Bank of Japan. We'll see the Reserve Bank of Australia keeping policy very loose, and we'll see the Bank of England keeping policy very loose. So, no, I think that more money is being ploughed into the market. And the reckoning will come, but maybe not even in our lifetime.
Let's analyze some of the major currencies then and take a look in order, if you like. You've already mentioned the dollar. Give us some more depth on what's likely to develop this year for the dollar. We've heard recently, of course, from the Fed that they're still very much watching what's going on in the markets. You mentioned COVID, and I think the Fed is, I'm right in saying, standing by for more stimulus. How do you see this impacting on the dollar's performance this year? And where's the key trade around the dollar?
Well, this is, of course, negative for the dollar, as I've already said. The dollar has been really the only safe haven. Previously, we talked about the Japanese yen and gold and the Swiss franc as safe havens. But recently, it's really been the dollar because money's gone into the dollar. It's gone in through the dollar into US treasuries. And so that's the trend. And as things get better, or perhaps it just looks as though things are going to get better, I think people will say, we don't need the dollar because we don't need a safe haven. We're quite happy to go into other currencies. Where will be the biggest effect? I suppose still on currencies like the Australian and New Zealand dollars. These are the key, as you know, these are the key risk-on currencies. So when people are willing to take on more risk, they go for the Australian dollar and for the New Zealand dollar especially. And as I said before, also, the Reserve Bank of Australia is keeping policy loose. Investor confidence is high. So these trends that we've seen already are likely to continue. The one thing I would say on the other side of the coin is if you're a contrarian, you might say, well, hang on a minute, everybody's expecting the dollar to keep falling and other currencies to go up. So maybe, as I said, from a contrarian viewpoint, you might expect the opposite to happen. It is always a bit worrying when so many people think things are going to move in one direction.
And of course, the other thing about the US dollar is where we go politically with the inauguration of Joe Biden in the next week or two from this point of recording here. How is that going to influence things? And what should we be looking at that might be a dollar driver this year because of the political change?
Yes, I mean, at the time we're talking, Jeremy, we don't know the results of the votes in Georgia and whether the Democrats win control of the Senate. If they do, then the Democrats will have a president. They will have majorities in both houses of Congress, the House of Representatives and the Senate. And I think the result from that will be that Joe Biden will propose and will push through a very large stimulus program. So we will have both loose monetary policy from the Fed, and we will have fiscal stimulus from the president and from Congress. So I think that's another reason for the dollar to fall, because so much money will be plowed into the US economy. Both monetary policy and fiscal policy will be kept very loose. So yes, another reason for a weak dollar.
If you can keep your head
when all about you are losing theirs,
what possibilities might you see?
If you can see it,
the world is yours to trade and invest. See it, IG it.
Okay, let's take a look at what's happening with the euro. The euro dollar is, of course, I think about 70%, I believe, of the dollar basket. We're talking there about weakness of the dollar. Does this automatically translate then into strength for the euro? Are we likely to see further multi-year highs for the euro against the dollar?
In a word, yes. The European Central Bank has previously made it known that it wants to keep euro-dollar, the exchange rate, below the 120 level. It's already above that level, and for all I know, by the time that you listen to this, it'll be at 125. Not really, but it's going up very strongly, and I don't see that there's anything that the ECB can do to bring it down. So I can't see any reason why the euro wouldn't keep rising, whatever the ECB does in terms of monetary policy. So 125 as a sort of medium-term target.
That's interesting, given the fact that the ECB was the first of the two big central banks, the Fed and the ECB, to move down. In fact, we've got negative interest rates in the eurozone, of course. What is it that is the root cause of this rise in the euro? Is it just a function of the fact that it is a trade against that weaker dollar? Or are there other things that mean that it is an attractive currency to own?
Principally the former, I think. As you said, euro-dollar is the biggest trade by far in the markets. And therefore, when the dollar goes down, the euro automatically goes up. But also, I think the ECB is quite slow at reacting. So it has said that it's going to do a review of its monetary policy, but then that's still some way down the line. And I think that the markets prefer central banks like the RBA that do things quickly. And so I think that the slowness of the reaction of the ECB has something to do with it as well. The euro just seems to keep going higher. And although it might perhaps underperform the Australian dollar that I was talking about before, again, apart from that contrarian view, I can't see any reason why it shouldn't keep rising.
Staying with the US dollar, I just wanted to make one reference, if I possibly can, to what's happening in China. We've been covering a lot of this with clients recently in terms of positioning, because we've seen this big decline for the dollar against that Chinese currency. I asked the question about the euro, as whether or not there's anything attractive about the euro, from an interesting point as to where there is attractiveness in the market. We're hearing a lot about the growth in the Chinese economy. We've seen evidence recently that, yes, the recent PMIs, as of the time of recording, have been a little bit weaker than expected, but still showing growth within the economy. The PMIs are at 50 plus, indicating expansion. So even in this time of strife, China clearly is doing very, very well. The Chinese yuan obviously is appreciating because of its attractiveness in terms of an economy that's continuing to burgeon. Do you see that situation remaining for the rest of the year? Do you think China will continue to be an outperformer on the economy?
Well, China has just upped its official yuan exchange rate, and I think that the global economy will rise towards the end of the year. And the old saying about a rising tide lifts all boats. I think that everything is going to benefit. I think that I don't sound too optimistic at this point. There's lots of ifs and buts here. I mean, for example, we're assuming that the coronavirus does go away later in the year, that perhaps chased away by these vaccines. If not, of course, all bets are off. But it does seem that the global economy is in for a pretty good year, at least sort of Q2, perhaps H2 onwards. So there are all sorts of things that could possibly go wrong. But yes, I think there's a coordinated increase in GDP coming, but clearly some countries will benefit more than others. And China is certainly well placed to grow strongly. I mean, just if you order things from Amazon, how many of those things that arrive are made in China? I've been counting them, and almost everything I order now is made in China. It's just extraordinary. So yes, I think that a lot of people have said that the next few years will be the years of the Asian economy, and I think that could well be right, led by China.
Yeah. How's Japan going to benefit from all this if the Asian economies are the ones to focus in on? You mentioned the Japanese yen in the context of a traditional safe haven play within the market. How do you see the yen developing this year?
Yes, in this context, I wouldn't see Japan as being part of that sort of Asian climb, because Japan is already a developed economy. I mean, we're talking here more about economies that have plenty of room to grow, not just China, but also places like Vietnam, for example. I think there's a lot of scope for there. The Japanese yen, again, I think I mentioned this before, used to be thought of as a safe haven, but I don't think it is anymore. And therefore, I still think that the sort of general rise in sentiment would lift the Japanese yen as well. And the Bank of Japan is another of those central banks that's promised ultra loose monetary policy. So yes, rising along with the others against the dollar, at least, perhaps underperforming maybe against the Australian dollar, but then that's usually how it works, with the yen somewhere in the middle. So optimism that the virus will go away thanks to vaccines, lifting the global economy, but there are still things that could go wrong.
What about sterling? We were looking at putting together some sort of look ahead to 2021 at the back end of 2020, and we shied away from talking about the foreign exchange markets because we didn't want to get drawn into any discussion around sterling. And of course, Brexit. Now, Brexit transition period has now officially come to an end with this deal that's been hammered out. But yet, of course, we still don't know the full detail of the financial services sector, which, of course, accounts for such a large slice of the British economy. How do you feel about sterling going into 2021?
Yeah, I mean, that's all exactly right. Bank of England will keep policy loose. There's a vaccination program. But just as importantly, there are EU-UK talks going on at the moment, we assume, about an agreement on services. We've had an agreement on trade, but we haven't really heard anything yet about services. And it's really quite interesting that this has dropped to the bottom of the agenda at the moment. You don't hear anything on the news bulletins about how the talks are going. And yet it's clearly very important, because the services sector is such an important part of the UK economy. So we're hoping that things are going well in the background, but we just don't know. In the meantime, well, sterling is just going, is another of these really strong currencies at the moment. And as you'll know, Jeremy, there were all these forecasts of doom after Brexit, and yet they didn't come true. Sterling is continuing to power up, and I don't see, again, any reason why it shouldn't, unless we hear really bad news from those talks between the EU and the UK.
Martin, thanks so much indeed. We'll leave it there as we look ahead to 2021 in the foreign exchange markets. Martin Essex, analyst at Daily FX, joining us there with a look ahead to some of the potential moves in the FX markets in 2021.
For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.